But let's take a look at these markets and bring in the experts. On the technicals, we've got Larry Shover. He's the Chief Investment Officer at SFG Alternatives. And on the fundamentals, our guest host for the day, Lisa Mears O'Connor. She's a Managing Director over at Mellon Capital Management. Lisa, let's start with you. Plain and simple, what do you make of these markets?
You know, we find some really attractive opportunities out in the global equity markets, particularly relative to bonds. You know, we're a global relative value player, so in terms of where we find equities attractive, we like core European equities, we like some Japanese equities. We've actually moved to neutral on U.S. equities. It's been a great rally, but we see earnings growth decelerating. And we don't like equities in the U.K. or Swiss markets.
Yeah, decelerating earnings, that's an issue. Of course, we were just talking about that. One of the themes, the fact that guidance is lower. Hey, Larry Shover, what's your take on the fact that guidance for all 10 sectors, net, the upward guidance minus the lower guidance is negative? What's your take?
My take is exactly the same as it was last earnings quarter, and look what happened. I mean, I think everybody's trying to insulate themselves, especially on the gigantic companies who beat on the revenue side, something that was very encouraging, something that we haven't seen in a very long time. I mean, we do have a tough act to follow, and Adam, it is true that this rally is all about growth, and at some point the growth metrics have to revive themselves, catch up to where the market is today. So I think that's why everybody's been so sinking conservative with their guidance going forward.
What is it going to take to revive those growth markets?
I'm sorry, I missed that.
And how are we going to find that growth? What's going to be the catalyst to spark it? We've been talking about it, yet we don't ever see it.
No, we don't. We don't ever see it. But let's be honest with the risks to the market. I mean, overall, we can trace the bloodline of this rally to Europe, and so that has to continue to improve. We can't use the debt ceiling as a fiscal negotiating tool. And then lastly, growth. Growth needs to revive. We haven't seen it. Just look at it this way. The FOMC is probably going to have to keep their foot on the gas pedal for the next 18 to 24 months. That's going to continue to keep equity markets reviving with or without a lot of growth. We just need to see a little bit of growth.
So, Lisa, let's dig in here a little bit on your notion of relative value. For the reasons Larry highlighting right there, slowing growth, you're not keen on the U.S. You like Europe. I know you see some value in Germany and the U.K., I believe, but or rather, you like Germany and France. You don't like the U.K. and Switzerland. Talk us through the relative values there.
No, I think, and just kind of going into a lot of those themes, growth is low. We definitely see that. So we are looking a lot on the earnings growth as well. So in terms of Germany, we are seeing a nice rebound in terms of economic growth. Through the PMI has been strengthening. You see economic surprise index surprising on the upside with particular strength out of Germany. That's important. You know, in terms of capturing that earnings momentum, we think one of the other important themes about earnings growth out of Europe is that a lot of these broad multinational companies generate 40 to 50% of their revenues outside of Europe. So they can access broader global growth, although it is low. Global growth is low, but the ability to capture beyond it has been incredibly important. And we do see some economic stabilization within Europe, led the way by Germany. So we think, you know, when you're looking at what your valuations are, you've got to look at your forward-looking earnings relative to your price. So on a valuation basis, we do think Europe is attractive right here.
How much do you really believe the European story? How much conviction can you have? Because it was this time last year that it was disaster town. So many investors, even if they want to believe it, have a tough time really putting their money there.
No, I hear you on that, but I think you've got to look at those price relative to the forward-looking earnings. And that same theme has been there for the last year, and you've seen a pronounced rally out of the European equity markets, particularly the core European equity markets. So we do think it does pay to look at those underlying fundamentals and where the valuations are. When it gets really, really cheap, you still will bounce. So sometimes you do need to be contrarian there.
Larry Shover, you tend to focus more on the U.S., but as you listen to Lisa make the case for better relative value in Europe, is there a way that you can play that as a futures trader in Chicago?
Well, absolutely. I think you just pick any of the ETFs that are in Europe. But look at it this way. One thing we're not talking about is the fiscal consolidation in Europe is a lot more correlated to global growth than anything else. So even if Europe doesn't get much better this year in 2013, but we do find demand in the emerging markets, that's good for European equities. So I think, by and large, just a broad-based ETF, the MSCI index, something like that.
Hey, Larry, you know, for so many months, guys like you out in Chicago were talking Europe, 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 and then over the past several months, we were focused on politics, and Europe took a back seat. Now, all of a sudden, over the past week, we're talking Europe again. Are the guys focused on Europe down there to the extent that they were a few months ago? What are people talking about on the floor?
Well, I think what people are talking about in Europe is actually the euro more than European equities. I mean, that's something that people are scratching their head. Are we going to hit that key resistance point of 139.50 or 142? What's Europe going to do? That's not a good thing for them. Is Japan going to be buying euro bonds to depreciate their currency and continue to add fuel to the fire? Or how about early repayments of the LTRO? No one was ever talking about that. So I think everybody's just looking at the euro, what the next move's going to be.
Lisa, final thought?
No, I agree with a lot of what's been said. You know, I think that the strong euro is a problem for European growth. I think that it would be better for European growth if you had a much weaker euro. It has been persistently strong based on sentiment. So no, I agree with a lot of those themes.
Well, thank you both for joining us. Always great to get both perspectives from a technical and fundamental standpoint. Larry Shover joining us from Chicago, where he's the Chief Investment Officer at SFG Alternatives, and Lisa Mears O'Connor, who's stuck with us all hour. She's a Managing Director at Mellon Capital Management.
You know, if there's going to be a foot of snow in Boston, I hate to think what's going to happen in Chicago. That may be the last time we see Larry Shover for a week.
That's true. We may have to Skype him next week.
Yeah, we just might. All right. So here's what you need to know.